So as I've done the last 4 years, I'm going to do a review of the forecast that I made a year ago for the Orange County real estate marketplace, and I did not do so good. But I'm also going to do a preview of forecasts for what I expect to happen over the next 12 months into 2023. But before that, let's take a quick look at the last couple weeks here of the year and see what's been going on. Inventory dropped again over the last 2 weeks. Classic holiday market, but right now inventory is more than double from what it was last year at this time. We're going to be starting the year at about 2,500 homes available for sale, which is the second lowest number since tracking of these numbers began 18 years ago. On the other side, demand also dropped, but not quite as much as supply. So even though it's still technically a seller's market, with expected marketing time dropping down from 84 to 76 days, sales numbers themselves are the lowest for this time of year, again, since tracking began 18 years ago. Interest rates, of course, are the current story. And although they've eased a bit since early November, the high point, in fact, we're down almost 0.75%. But things are still very, very slow. Now, let's take a look at the predictions that I made a year ago and then see exactly what happened. So it's interesting, the year was two distinct parts. The first portion of the year, about 4 months, 5 months or so, the market was sizzling white hot, unlike anything we've ever had in Orange County. And then the second portion was cold, like ice cold, exactly like what I experienced the week before Christmas in Minnesota. Take a look at this. Firstly, I predicted severely low inventory with a peak quantity of listings of about 5,000 in August. Turns out it was less, 19% less. The year started out at a record low inventory, and although we did see some increase into the spring, it just never ever really took on. The reason for that, I think, is a combination of things. Number one is that sellers who were looking out in the marketplace for something to move up to were discouraged by the high prices and discouraged by the lack of inventory. And I think also they refied a year, 2.5 years ago to a sub 3% interest rate. And although they don't necessarily love their house, they love their interest rate and decided not to put the house on the market. Secondly, I predicted steady demand all year long and about an 8 to 10% appreciation in home prices for the year. Now this was hugely wrong. By early summer, demand fell like a stone relative to historical patterns, and prices year over year were slightly down. Sales this last year actually peaked in March, which is early. Usually it's April or sometime in May. The numbers never were really there because interest rates were so high. A huge number of buyers, unfortunately many of whom I was working with, just got out of the marketplace altogether. This year's high point for sales is the lowest we've had in over 20 years. Number three, I predicted a normal annual cycle with the highest sales in the spring, peak inventory in the summer, and then a decline in supply and demand from the fall all the way through the end of the year. So this one I actually got right. High point of sales were in the spring, high point of inventory was in the summer, and inventory and demand just trickled off through the end of the year. But if you're keeping count, that's 1 for 3. Number 4, and I really missed this one as well. The forecast was for a very slight decrease in sales with a slightly smaller decrease in luxury sales, homes over $2 million. What happened is that sales volume was down almost a third, with luxury sales being down 15%. Low inventory and high interest rates absolutely crushed demand. Forecast number 5. I'd predicted a small increase in rates with the max being at 3.5%. oops, rates eclipsed that 3 weeks into the year. And by late October, and then again in early November, they had more than doubled. Well, good thing I didn't start a bond hedge fund. The Federal Reserve basically was trying to put a brakes on the economy, the brakes on inflation, and the brakes on the real estate market. Well, they succeeded. This graph here shows the change over the last year, with the peak in late October and early November. So of the 5 different forecasts I made, I only got one right. 20%. 80% of my forecasts were wrong. So, given that track record, let's take a look at 2023 and what I think is going to be happening. Forecast number 1, much higher inventory in 2023 with a peak of about 5,500 homes for sale in August. That's about 35% higher than 2022, but still well below the 7,000 pre-COVID average. Forecast number 2, demand is going to remain muted and prices are going to be dropping between 6.5% and 8.5% for the year. Forecast number 3, normal real estate cycle with the highest sales in the spring, inventory peaking in the summer, and then the decline in listings and sales in the fall, decreasing all the way through the wintertime. Forecast number 4, a 6.5% to 8% decrease in the total number of sales, below 23,000 units for the year. Also, there's going to be a very slight increase in distressed sales. Those are foreclosures and short sales, but the number is going to be so small that it's going to be a non-factor to the real estate market. And lastly, forecast number 5, a decrease in interest rates. Right now, we're going to be starting the year at about 6.4% average, but they're going to be lower, 5 to 5.5%. The slowing economy and the lower inflation numbers is going to cause the Fed to ease the interest rate hikes that they've done, and it's also going to calm the bond market a little bit, and we're going to see interest rates drop. So those interest rates dropping are going to fuel demand up a little bit to offset the increase in inventory that we've seen, but still, it is going to be a very slow and muted year for real estate, at least for the first 6 to 8 months until those rate decreases start to take effect. Now, for 2023, if you're thinking about selling your home or you're thinking about buying a home, now more than ever, you need to understand and know the systems that I run and the strategies that I use to help both my buyer clients and my seller clients. If you'd like to talk to me further about that, you can call me. My number's 949-413-2371. You can email me, michael@hausamgroup.com. And then lastly, if you've been watching this on YouTube, you can click the little letter I above my shoulder. That will take you to a landing page on my website, and we can set up a strategy session at that time. Thank you so much for watching. We will be doing this every 2 weeks with an update, and then in about 52 weeks, we'll take a look and see how I did.